And we are live for this earnings review for Tesla. As you probably all know, Tesla had its earnings call yesterday, and as always, it was great drama. They published a beautiful earnings report before the call, and people were very excited. The stock actually went up a lot to 405 peak. And then once Elon hopped on the call and the call started, it was all doom and gloom. I don't know why exactly, but you know how people are, the fickle investors. They just love to be difficult. And so everyone was unhappy with the vibe. And Elon started the call with a huge CapEx announcement, $25 billion, $5 billion more than we all knew before. And so that was kind of a problem for everyone. And then the stock dropped, unfortunately, a lot. And this is also what we are seeing today. Market opened and the stock is down now 2.84%. Not the worst, but definitely something that no one enjoys. So that's kind of where we are at. And I want to go through today what's actually happening here. And what my summary is. I have a nice little write-up here, an earnings summary write-up. Let's go through it and I will tell you exactly what I see in this earnings call or in these earnings in general, and why I think we are actually in a very beautiful Goldilocks moment as investors, as traders. You know, I'm both. I have a nice little core position for Tesla, my most bullish position, and I am trading around it to generate some alpha, the Pioneer Alpha. That helps us to always generate a little bit more or a little much more than Tesla itself. Here's my summary before we go into the stock situation and what we are doing next. Summary is we have multiple important beats, but let's go through the details and then do the summary. What about that? Auto gross margin, very important. The auto gross margin, the amount of money they make on the auto business, 19.2%. versus expected 17.5%. Now, if you find margins boring, let me tell you something. When it comes to manufacturing and auto, this is an absolutely mind-boggling margin already. Tesla is a total margin leader in the auto industry. And more importantly, expected was 17.5%. So if you sell a car for $100,000, to make it simple, you're making $17,500 in gross margin after costs of goods sold, after the production costs. But Tesla went up to 19.2%. Now, why is this important? Because as we will see in a second, we are now unlocking insane new manufacturing verticals, chips, maybe even rockets. Well, rockets is SpaceX, Cybercab, and of course, solar and batteries without limit. In this new verticals, in these physical manufacturing verticals, it is of utter importance to be absolutely on top of your game in terms of manufacturing efficiency. And there is no other company in the world that is better at this stuff than Tesla. And this shows you that with all the talks about, oh, Elon, and he's exaggerating, he never delivers. If you know anything about manufacturing of very complicated things like cars, this is exactly what delivering in a management and operational sense means. It means to drive the gross margin in an industry that is under tremendous pressure, even higher than it already is. So for me, this is actually super important and was one of the reasons why the stock went up so much before the call started. Now we have delivery growth. Also important, we see Tesla core business recovering across the board after a challenging 2025. And we see people all over the world buying more Teslas. In Europe, we see it rising especially, but we also see it in other markets. So a huge recovery, very interesting stuff. Gross margins up, despite the tax credits expiring. Very good. On the Robotaxi side, we saw safety reports, right? As you probably know, if you follow my channel or other channels that cover that, we had no incidences reported in Q1, even though we also doubled the paid Robotaxi miles. Enormously important that Tesla takes safety extremely seriously, and that is the key to not derail the whole Robotaxi scaling operation. We will get to this in a second. Now, let's continue with this. Rollout, of course, that's what everyone is interested in. Well, first here, paid Robotaxi miles doubled. So we see massive scaling on a low base, but we are now at nearly 1 million miles. As a reference point, to be fair, Waymo's at 50 million, right? But if you double your stuff every quarter, then 50 million is not very far away. So rollout, that is of course one of the central things that everyone is looking at for Tesla. When do we actually scale more? And Elon now reiterated a dozen cities end of the year. He mentioned they're getting caught in loops at intersections. So there are some edge cases, tails they have to overcome that require an increased amount of training. Maybe means we are not seeing an inflection point too soon, but I will get into this in a second. And by the way, if you take a look at the Robotaxi tracker, you all know what's happening. People lose sight a little bit of what's happening. This is the unsupervised fleet. Of course, people say, Joe, this is only 17 of these unsupervised Model Ys and Cybercabs, or I think only Model Ys at this point. But just look at the growth. Okay, here you're looking at this whole thing actually started only in January 25th. That's only 3 months ago. That was the first time when we actually saw unsupervised cabs rolling out and driving around. And then it grew quickly to 7 and 8, and now recently went up. And as you see down here, we added even 2 new cities. We added Dallas and Houston. So sure, this is a small base, but look at the expansion speed. If we keep this up, we might be in good shape sooner than people expect. Well, I will go into that in a second. So that's going on with the rollout of Robotaxi, the autonomous transport revolution. Now let's talk about Cybercab. Okay, so that was also pretty dramatic. I think Jeff Lutz was the first one to actually retweet it on X. But during the earnings call, yesterday during the earnings call, Tesla had an official post on X saying Cybercab production has now officially started. This is not pilots anymore. Yesterday at the very call, earnings report release, Tesla started officially full-on Cybercab production. Now, if you're not a production geek, you might not know what the difference is. Oh, they produced 100 of these. What's even the difference now? Well, the difference is in the beginning, they're still pretty handmade. They're testing these production lines. Everything has to be manually checked. Once production actually starts, you have the actual conveyor belt or whatever an unboxed method actually does, where you have real production. So we are now at the precipice of actually churning out a lot of Cybercabs, and we have already seen 20, 30, 40, 60 Cybercabs a week over the last 4 weeks. And that will be an important point in the end that I will summarize to actually get to some numbers here. FSD, number 5, increased miles, 90% subscriptions grew 16% sequentially. So that means the paid FSD miles, not of Robotaxi, but of Tesla owners, increased 90%. So they nearly doubled the amount of miles driven on FSD. Let that sink in. We are talking about millions and millions of people who own Teslas have now doubled in the last quarter the amount of miles driven with FSD. While the subscriptions grew 16%, which is, by the way, a lot. This means real cash coming in. But it's only 16%, right? 16% more people opted into FSD, but 90% more miles were driven, which means in average, the regular Tesla driver now uses much more FSD than before, which is an indication that FSD is becoming much, much, much better for people. Otherwise, they wouldn't use it so much. Now, a real banger. We are nearly done. We have 7 points in total. So we have 8 points in total. The real banger for me, unexpected, very interesting, was Optimus. So I'm not a big believer that Optimus will bring in a lot of cash in the next 24 months. Very different from Robotaxi. I think Robotaxi will be the huge forcing function that reprices Tesla stock. Maybe not in May, maybe end of the year, maybe next year, maybe earlier, maybe in September. But Robotaxi is a huge forcing function because it's that close to revolutionizing and completely transforming Tesla's free cash flow. Because when you run the math, that's what we're doing over here, you see that there is a lot of money coming in. Once you hit that critical mass of 2,000 Robotaxis and keep scaling, then cash flow really changes. For Optimus, much more complicated, much longer time horizon. But Optimus is the thing that is even bigger as a market, as a TAM, as a total addressable market, and it captures the imagination of people much more. And we haven't heard about Optimus in a very long time. We have had no updates. And I told you guys a year ago why that is. And Elon confirmed at this call. It is because there is actually competition, very different to Robotaxi. But for Optimus, there is competition in the world, some serious competition, and you don't want, if you're the leader, which I think Tesla is, you don't want to show your cards. You don't want to show Optimus because it's much, much more unknown. It's much less general knowledge than FSD, for example, what these robots actually are. What are all the details? So these are real frontier innovations, and you don't want to show your cards before you start the game, okay? And what is the game? Actual commercial production. And that is why we haven't seen any Optimus updates, which means there is a lot of attention here, potential attention to what Tesla is actually planning to do with this Optimus situation. And now Elon announces in the earnings call, we will start Optimus production in Q2. So make this Q3 maybe. But we are going to start this, even though they were not late on Cybercab. Don't forget that. Maybe it is Q2. I think it's very close and imminent. Now, what does that mean? I don't think that's going to move free cash flow a lot, but it will present to the world Optimus Gen 3. And this thing will be probably very good. That is what I'm thinking. So from a pure tactical stock perspective, I think this is just an enormous catalyst sitting here. That is very, very interesting. Very interesting. I think it's completely ignored by people. I mean, this thing can drive up the stock $100 in my opinion. This is a real super strong soft catalyst. You know that I have my hard catalysts. Hard catalysts are things that force even the most backwards analyst out of their basement and upgrade the stock against their own will. Okay, hard catalyst means there is free cash flow exploding. You can't do anything against it. If you're an analyst, you have to follow. Strong soft catalyst like this is for the people who are positive on Tesla or neutral. They have to do something about it. So I think this is coming very interesting. And this is not a weak catalyst. Optimus is a huge catalyst once it becomes real. And this might be the moment where it becomes real. I tell you, the potential for humanoid robots, even in terms of pulling forward stock price, is huge. Now, new vehicles, Roadster comes in a month. Cybercab will be the biggest product by far. Roadster might fly. Who knows? I did some videos on the flying car theory. But Elon reiterates, of course, this is not a big driver. And finally, the last point. The last point is the point Elon started the call with. CapEx, capital expenditures, the investments into capital expenditures, into factories and stuff like that, and into robotaxis, if Tesla owns them, into cybercabs, is now increased from $20 billion for 2026 to $25 billion. In addition, the spend in Q1 was actually lower than expected, which means we are pushing most of that into the last 3 quarters, which means for the last 3 quarters, we go from 5 billion expected to 9 billion expected. And you know, this is very interesting. Is that good or is it bad? And obviously, if you believe in the growth story, if you believe in the age of AGI, if you believe in this transformative power we have, obviously it's good. Like no normal person would say it's not good. But in the stock market, capital expenditure, the question whether it's good or not is a sentiment question. It is a question what the market feels. It's all about feels and vibes. If the market is aggressive and positive and bullish, CapEx is good. Because the market says, look, they're spending all this money, which means they're going to make so much more money, which means buy the stock. But in a market that is a little delusional or skeptical or bearish, like the current market is very schizophrenic. The current market knows we are at this inflection point, we are going through this singularity, they understand AGI is already here, has been here, now it's even more here. They know infinite revenues coming, but they also want to be skeptical about it and invent these AI bubble talks all the time. And we saw that companies like Meta got really punished after the earnings call, the previous earnings call, when they announced very large CapEx. Even though I said, dudes, what's wrong with you? Market, buy Meta, like this is good stuff. Of course, they're talking about a very different dimension. They're talking about 200 billion CapEx, not 20 billion or 25 billion. But right now it's negative. And so that completely dropped the stock. Which is interesting for us. Okay, let's take a look at the stock. Now we are zooming into the stock, talk more about this. Recovering pretty nicely. I will get into what I did and what my break-even point here is. Spoiler alert, it's 375. I will explain exactly the trade I put on. Probably you saw the video yesterday. Sorry, I was late yesterday, by the way. I recorded it probably 4 hours before market close, and then my editor was not available until late. So I'm late with the video. It came out after market closed, which was a little delayed, but it doesn't matter. So I will get into what I thought yesterday, what earnings will be, why I actually played earnings, and why my break even is roughly 375 by tomorrow. I'm very positive that I will come out winning on this. Or let's say I'm positive, not very positive. I don't want to jinx anything here. But I'm positive, I'm coming out positive here. So what is my summary of the situation? Here it is. We have multiple important beats. This was a very good earnings season, right? Or earnings report, not call. It was a very good earnings report because we had this important gross margin beat. I think this is just a very important indicator, not just more money for all of us as investors, but it confirms that Tesla is absolutely on top of their game as a manufacturing powerhouse. And that is what will count for Optimus, for Cybercab, for batteries, and of course for infinite solar in space. So it just confirms, sometimes it's important to confirm these things. Tesla is not just one of the best or the best. They're getting better at manufacturing and really squeezing out these gross margins. Second, the CapEx situation that killed the stock price yesterday after hours, where it went from 405 all the way down to whatever, 380. CapEx is of course bullish. I mean, are you kidding me? If Tesla, I think they're spending on the lower end of things at 25 billion. Look at everyone else in the Max 7. They're except for Apple, the big loser in my opinion. Everyone else spends 160 billion, 200 billion a year now. Amazon, Microsoft, Nvidia, not that much, but also a lot. So Tesla is the tiniest little person here outside Apple in the Max 7, while also being the only company that actually manufactures real big fat things. So 25 billion is a bargain if you look at these cash flows coming. And the fact that they're doing this, I mean, that's the absolute minimum I would expect. So for me, this is very, very bullish. And now I will get back to my gross margin again. We have to understand, Tesla is one of the best run companies in manufacturing and in financials, actually in the world. And that is a huge, huge confirmation. This gross margin that these 25 billion we are going to spend are not going to be wasted. Tesla proves again and again that they are the masters of capital expenditure in building these things and manufacturing. So what do you want? Who else would be better to spend this money than Tesla? Who else would you trust more to be stingy and efficient, to make you more money than they spent? Who else? Not the government. So I think very bullish. And then Optimus, of course. These are my 3 takeaway points. We have multiple important beats. This was tremendous positive earnings. CapEx, I'm very happy about this. This is bullish. This is a little on the low end in my opinion, but let's go all in and be efficient. And finally, Optimus. Okay. All in all, no negative surprise for me. Everything as expected, plus these positive surprises, but multiple positive ones. The main potential negative is subdued commentary on Robotaxi scaling. I mean, this is the big question mark. Was that negative on Robotaxi scaling? And I went into this before the call, and I told everyone, here's what I expect they're going to say. They're going to say we scale safety first. It's all going well. We're adding more cities. That's what I expected them to say. And that's exactly what they said. I expected them to basically say not much, because I never say much about Robotaxi. How can you say much? So the only thing they added where they were more specific was, oh, we are at 12 cities end of the year, which for some was disappointing. But here's how I think about it. I do think 10,000 plus unsupervised Robotaxis this year are still possible. And that's my expected to positive, more bull case. Okay. Some people might say, Joe, you're delusional. Maybe delusional, but I'm not that delusional. Over the next coming days, I will have a video going into an updated Robotaxi scaling model where we look at exactly that. We are going to look at, okay, can we get to 10,000 unsupervised Robotaxis or can we not get to that? That is the big question, and we are going to look into that. I think we can. It's a tight schedule, but not a crazy schedule. If we continue what we see here, we can actually get there. This is the surprise insight. People don't understand exponential scale. And I will have in the same video, plus in an additional fully focused video, an analysis of Cybercab. Because don't forget, I said it again and again, Cybercab production is our best possible indicator, quantitative indicator. What can happen and will happen very likely. Why? Because Cybercab is a real capital expenditure thing. It's a real manufacturing effort by a very professional and big company. It's not just Elon talk. These are billions and billions of dollars put into manufacturing infrastructure that is now alive, which means it has to put cars out or it's a disaster. Okay. And Tesla normally doesn't create disasters. Maybe it creates it on the stock when Elon is in a bad mood, but it does not create disasters on execution. And that means Tesla is kind of now in a corner, in a positive way, to have to scale Cybercab. And then Tesla, of course, and Elon said it will be painfully slow to get these Cybercabs out. Painfully slow. When you look up what that means, it means, for example, Cybertruck. Cybertruck was painfully slow. Okay, Cybertruck, if you overlay the growth of Cybertruck and Cybercab, which is much easier to produce than Cybertruck. If you take the same curve of production scaling of Cybertruck, you would end up at something like 25,000 Cybertrucks. If you would launch Cybertruck now, yesterday, you would end up at roughly 25,000 of these things produced by end of this year. Now Cybercab is much easier to produce, obviously. It is definitely easier to produce. It's a much smaller car. It's a much more streamlined thing. So even if you cut, here's the interesting thing, even if you cut Cybertruck scaling line, scaling function in half, even if you cut a super slow scaling curve of Tesla for much more complex cars, even if you cut that curve in half, you end up over 10,000 Cybercabs produced end of the year. And I like that analysis because it's actually interesting because it is not something optional for Tesla. If you would underperform that curve, it actually comes at a serious capital cost because you have all that stuff standing around and you're not doing anything and you have suppliers and everything. So these manufacturing lines have to be used. So it gives us an indication if they started, if they have it prepared, that people might get very surprised at the end of the year. And that is why I'm sticking to my 10,000 plus unsupervised. Why unsupervised? Because these are Cybercabs. You cannot supervise them because there's not enough, there's no space in these cars. You cannot have a safety driver in a Cybercab in commercial operations. You know, and when you connect these dots, I think people might get a little surprised because that was my original, or not my original, but over the last 6 months, my prediction. And if that comes true, I said 20,000, but the difference between 10K plus and 20 is very marginal. And we are in a very different situation here. And maybe people wisen up to the whole situation. Maybe that's why you see the stock recovering. See, it's recovering and recovering. I was pretty positive on this. What I did is I put some at the money puts and slightly out of the money puts because very nice premiums. So I had a 380, I had a 385, and I had some 390, which are underwater now. Puts, and 375 is my break-even point, where I make more money, where I make money on this trade, where I generate alpha over Tesla core position. So let's see what happens by tomorrow. I'm pretty confident that the market is not as dumb as it looks like, and this will recover more. If not, I think it will be soon. In principle, I think we are ready to rally, over 400 again. And I said again and again, all-time highs, more likely than not, before even anything happening. And now we have the Optimus point coming. In 90 days, we have potentially some serious Cybercab scaling coming in the next 90 days. So do I believe we reach all-time highs in the next 90 days? Yes. I mean, it's a pretty bold statement I'm making here because, you know, I don't want to be wrong, but I have high confidence. We probably reach all-time highs if the market does not implode. Macro, NASDAQ, Iran, you know the whole thing. So let's see what happens.